The most dominant ticker on the macro tape today isn't NVIDIA or AMD, it's SanDisk. The equity locked in an unhinged 10.89% breakout session to close at $2,273.73, polling top 3 absolute dollar volume across the entire stock market. Retail chasers are frantically asking if they can still chase this size. If you've been tracking our desk, you know we didn't just notice this setup today. What the broader market is finally realizing, our community anticipated weeks ago. To recap our spreadsheet, we flagged the institutional accumulation on June 11th and filled our block orders on June 17th near the $1,955 floor, immediately riding an 11% rip. Despite the subsequent June chop, we held our core size. Our framework remains locked. AI storage isn't a near-term narrative. It's a secular, multi-year structural expansion. Sitting on a 16% plus net float at $2,273, the real victory isn't the percentage gain, it's the market validating our core thesis. If you are tactical macro traders front-running high beta AI infrastructure and hardware rotations, smash the like and subscribe. Drop your targets below. Does SanDisk print $3,000? Check the description to unlock our private desk. Most commentators assume SanDisk is ripping purely due to raw AI volume, but that's only half the story. The reason sell-side models are aggressively raising targets is because the entire storage business model is structurally shifting. For decades, memory was the ultimate boom-bust cyclical commodity play, plagued by brutal pricing swings and volatile margins. Consequently, the street heavily discounted its multiple. Today, that legacy narrative is being completely rewritten. Bernstein just dropped a massive research note, hiking their SanDisk target from $1,700 straight to an unhinged $3,000. They aren't chasing the daily candle. Their models show forward earnings profiles are becoming exponentially more stable. The structural shift is driven by Tier 1 storage vendors, locking in 3 to 5 year long-term agreements. Instead of suppliers absorbing spot market drops, these LTAs enforce strict volume commitments and upfront financial escrow protections. Bernstein even ran a stress test model assuming a 70% collapse in NAND spot prices. With over 60% of shipments insulated under legacy LTS, margin efficiency remains highly resilient. The sector's core enemy, volatility, is fading. Chasers assume this year's 8 times run is entirely driven by sudden demand, but analysts note the real squeeze is structural supply constraints. Global NAND fabs are tightly policing wafer capacity, and next-gen clean rooms take years to build. As LLM parameters balloon, demand for enterprise SSDs and dense data center storage is accelerating. Desks estimate a structural deficit through 2030. The AI bottlenecks aren't restricted to raw compute flops. Memory is severely choked. This explains why the entire storage cluster is printing fresh technical highs. The tape isn't just repricing a single ticker. It's re-rating an entire industry from a low multiple industrial play into a premium secular tech compounder. Looking at today's intraday price action, market makers held the bids strictly above the VWAP all day, offering zero clean pullbacks for late entrants. If you aren't positioned, chasing here offers a terrible near-term risk-reward ratio. Let's test your conviction. Is this massive breakout just the launchpad for a multi-year AI storage supercycle, or has the asset expanded too fast relative to its short-term metrics? Lock in your tactical thesis in the comments below. Subscribe and hit the notification bell if this structural breakdown gives you an edge. For our exact entry clusters, trailing stops, and live options order flow tracking, check out our private community desk in the description. See ya!